headlines at 9 p.m. Government unveils a massive 2 lakh crore rupee package to bail out public sector banks. Finance Minister Jaitley says government will issue recap bonds worth 1.35 lakh crore rupees, while budgetary support and market fundraising will bring in 76,000 crore rupees. Also says the move will prop up the economy. Big boost for infrastructure as the cabinet clears a 7 lakh crore rupee mega highway project, aims to build 80,000 kilometer highways in the next 5 years under the ambitious Bharatmala project. Infosys beats the street with a 7% jump in profit in the second quarter, but slashes dollar revenue guidance for the current fiscal. In an about turn of sorts, the board under new chairman Nandan Nilekani says the probe report on Panaya cannot be made public. The Vasundhara Raje government blinks on the controversial gag order, puts on hold the proposed legislation which aims to provide immunity to ministers and babus from court cases. The bill will now be sent to a select committee for review as the opposition parties step up the heat. Big crackdown on terror funding. The National Investigating Agency arrests Hizbul Mujahideen chief Syed Salahuddin's son in a 6-year-old case. Interestingly, Shahid Yusuf's arrest comes just a day after the centre appointed former Intel chief Dineshwar Sharma as a mediator to initiate dialogue with all stakeholders in the valley. And terror tops the agenda as Afghanistan President Ashraf Ghani comes calling in a meeting with Prime Minister Narendra Modi. The Afghan President discusses ways to boost bilateral trade and stability in war-torn Afghanistan. And Portuguese star footballer Cristiano Ronaldo beats Messi and Neymar to pick up the FIFA Player of the Year award for the second consecutive year. Ronaldo is now among the elite few to win the biggest honour in the world of soccer for the 5th time. Good evening. Those were the headlines at 9 p.m. Time now for the India development debate. The big banking reform is finally here. The government today unveiled an over 2 lakh crore bailout package for public sector banks that are saddled with massive bad loans and poor credit offtake. Of this, 1.35 lakh crore rupees will be raised in fact through issuance of recap bonds, while 76,000 crore rupees will come in the form of budgetary support and fundraising from the market. Announcing the mega bailout package, Finance Minister Arun Jaitley said the move will help banks tide over the capital crunch and give a leg up to the economy. The mega bank bailout, however, will have a bearing on the exchequer as the government absorbs the interest on the recap bonds. The big questions, however, remain. Is the big bank bailout an NPA fix or just a book entry? What is the guarantee that banks behave prudently from here on? More importantly, is there enough appetite in the market for debt paper worth 1.35 lakh crore rupees? The big bank bailout and what it means to the banking sector and the economy at large. That's our focus tonight on the India development debate. And we're joined by a very special panel on the show this evening. It's a privilege to have Dr. Rajiv Kumar, Vice Chairman of Niti Aayog, join us live and exclusive on the India development debate. Also joining us on the show this evening, Anand Narayan, market expert, Maithili Busturmat, consulting editor, ET Now, and R. Jagannathan, editorial director at Swaraj magazine. Thank you, all of you, for joining us on the India development debate. Dr. Kumar, I'm going to start off with you. Critics would say, would question the fact that is this massive recapitalization plan that's been announced today, is it an NPA fix or is it just an accounting entry that's been made by the government? How would you respond to critics who say that this is not quite an NPA fix, it's a mere accounting entry made by the government?
Well, of course, I mean, I hope no critic says that and makes a fool of himself or herself, because the fact is that the government has pointed out that there were these 12 accounts which accounted for 1.25 lakh crore of NPAs, and they've all been referred already to the NCLRT. The second thing is that, the government is now giving the banks, fresh capital to overcome all the provision, the 7.5 lakh crore provisioning that they've had to make in the last 2 years, so that they can now use, as it were, the deposit that they've had since the demonetization to lend to good projects. So I don't see why this is not an NPA fix. And and given that the finance minister has also indicated that this will be accompanied as you go forward with some other banking sector reforms, and you will have to wait to see what these are, and I suspect they'll be quite substantial in order to get the bank's work, the public sector bank, the entire structure working much better. I think this is more than an NPA fix rather than just an account entry.
Indeed, I have to confess it's hard to find faults with the recapitalization bonds. We at ET now, and you were part of the debate as well, Dr. Kumar, making a case for recap bonds, but trying to be provocative here. Maithili, let me throw it to you. Is this a comprehensive NPA fix, or do you think this could be seen as window dressing of bank accounts?
I wouldn't call it window dressing, but it is a temporary salve for the simple reason that it's not been accompanied by governance reform. So what you're doing essentially is addressing the stock of NPAs that you have. But as the finance minister himself said, we need governance reforms to prevent a recurrence of this. We had recapitalization bonds in the 1990s, 93 to 95 during the time when Jaswant Singh was the finance minister, and now we've had to repeat the same exercise and on a much larger scale. And this is precisely because each time we looked at recapitalization bonds only as addressing the stock problem. We are not addressing the possibility of the same kind of situation arising again, and that can only be prevented if you ensure that public sector banks also function as commercial entities at arm's length distance from government, which means away from all government interference. And until you do that again, and unless you do that, you're going to have exactly the same situation come back to stare us in the face a couple of years down the line. So I would call this as a very temporary fix. Not enough. Yes, it's being done through an accounting entry, but that does not take away from it completely. What does take away from it a great deal is the fact that it's only a partial addressal of the problem. Unless this is accompanied by a complete revamp of how public sector banks are governed, ensuring that government interference is not there anymore and bankers are free to take decisions purely on commercial merits and not lend to, say, an infrastructure project because the government wants them to lend. I'm afraid that this will always remain only a partial solution.
All right, I think Dr. Rajiv Kumar wants to come in there to the point that Maithili was making, and then I'll throw to the other panel. Dr. Kumar, please go.
Maithili, I think you are being quite unfair, because you know that the government had launched the Indradhanush scheme, which was actually all about improvement in bank governance. They had the banking bureau. If you notice, for the last 3 years, government has already maintained an arm's length approach to the public sector banks. There have not been any irrational exuberance or lending by phone calls, as it was called earlier. All this is already beginning to happen. The banking board, the board of directors of the public sector banks, have been revamped. So there is already a strong beginning in the improvement of public sector bank governance. What is in store, and which the finance minister hinted at, is also the restructuring of these public sector banks, so that you can create stronger banking entities. But to say that this that unless this happens, of course that is a sufficient condition. But you must give the credit where it's due, which is that the government has started a process which will then unfold as we go forward.
Right. Maithili, I know you want to come in, but I do want to add, Dr. Kumar, that all evening Maithili has been on the channel complimenting the government on this move. I mean, all the experts that we speak in, Maithili has largely been pro this move. I mean, I just think she's being provocative. But Maithili, before I come into you, I want to get a word from Jaggi and Anand Narayan as well. Jaggi, is this an acknowledgement of the magnitude of the problem? Because, one would have been disappointed if they had done a piecemeal approach, 30,000 crore, 40,000 crore. They've sort of said, this is a big problem. They've acknowledged the magnitude of the problem, a 2 lakh crore. I mean, let's face it, no one in the market possibly anticipated such a massive recap program to be announced today. Jaggi?
Yes, absolutely. I think the fact that you have a very large sum mentioned shows that government has finally acknowledged that this problem is not going to be solved with a piecemeal approach where you put a 10,000 crore here or a 20,000 crore here. You have a massive 9 to 10 lakh crore bad loans problem, and even if 50 to 60% of that may already be provided in bank balance sheets, you still have 4 lakh crore of all kinds of things which may get impacted. So when you put 2 lakh crores on the table this year and the next, and most of it front loaded, I think it's the right way. You're sending the right message that yes, we are behind these banks. We will make sure that we clean up their balance sheets between this year and next year, and that's a very good message to send. And I hope they just don't do this accounting fiction. I don't think it matters if the fiscal deficit slips a bit formally, but it is better if the government takes it formally as equity and then asks the banks to reinvest them in government bonds, because in that event, when bank shares rise next year, the government will actually be able to offload the shares and make a profit from it and recapitalize even better. So this just giving decapitalization bonds is not a great idea. You should invest directly in equity. Let's not forget, in 2008, the US government took over Citibank, practically nationalized it, and then sold the shares back. If the US government can do that, this is the same thing what the government should do. It should not give bonds, it should take equity, then sell the equity by divestment at a later stage. It will actually make a killing. That's what it should do.
Right. Anand, comment on that. Do you think this is a comprehensive approach to the problem of NPA? And like Dr. Kumar pointed out, it has to be seen in the context of some of the other steps that have been taken and some of the steps that are due to be taken, which the finance minister alluded to as well. Is this a comprehensive fix to the NPA problem?
Well, three things, Sandeep. First of all, it's a welcome step, right? All this while, we've had analysts saying that the size of the hole in the Indian banking balance sheet is 3 or 4 times larger than what the government has set aside as capital to be infused. For the first time, we've seen that gap being bridged. So this is the government taking the first welcome step of saying, yes, there is a problem, and here is a large sum of money, which is very close to the analyst estimate of what the size of the hole was, and putting it on the table, putting the check on the table and saying, here's the money, now let's move on. The second thing is that while this might look like an accounting entry, i.e., the government is, effectively for the banking system, you have an increase in liabilities, capital coming in, and you, instead of getting cash as the asset, you're getting a bond, which you have to hold on your books. That might sound like a left pocket, right pocket entry, which can seem meaningless, but actually it's not. It's the government which is borrowing money from the banks and infusing it as equity. So it's actually borrowing to take the highest risk possible in the form of equity and infusing capital into the banks. Now that's a huge show of confidence as far as the system is concerned, and it should help the banking system grow from here on. Last bit, this is, I don't think, an NPA fix. The reality is what this capital does is it allows the banks, if you have the investment cycle coming back again, and if you have clients coming up and saying, I need to borrow cash from you, this capital provides the space for the banks to lend that additional sum of money. It doesn't by itself provide a fix for the gross NPAs or the net NPAs or the restructured assets that we have. That to me is the next stage, which still has to be resolved. Yes, there is welcome steps happening there in terms of bankruptcy code, etc. But we still haven't seen resolution of those particular stressed assets and release of that capacity into the system. So this is a welcome first step. It's a big step, but there is still a lot more to go for the solutions to the economic problems that we have currently.
Okay, and you spoke about the fact that this in itself may not kickstart demand and the investment cycle. I'll come to that in a bit. But Dr. Rajiv Kumar, the other concern is, which some people have raised, and I know your view on this, but again, for the benefit of our viewers, the fact that this will obviously interest paid on the recap bonds, is that going to be a huge drain on the fisc? Is that a consideration at all as far as policy making is concerned?
Well, we don't know what the interest, burden on the fisc would be. One, and second, you heard the finance minister and the secretary of banking say, that there are several innovative steps that the government is taking to try to make sure that the path of fiscal consolidation is maintained. You've got the bank equity being diluted, to 52%, and there's something like maybe about 60,000 crore to be raised from there. There itself. You have a target for the disinvestment being raised from above 72,000 by another 25,000 crore. You have the monetization of roads yielding about 80,000 crore, of which you found out that 9 had already been identified and committed. And then you have also the railways being now raising some of its own funds. So the government has now bitten the bullet in more ways than one and found innovative ways to raise its resources, to mobilize resources so that it can inject the kind of impetus to the economy that is needed to nurture the green shoots which have emerged and to reinforce the recovery, and at the same time maintain the path of fiscal consolidation. Now, I think this is a very commendable that's been outlined today, and you will see that the response would be in terms of both the market, but also more importantly, private investors coming back into the action, because not just because of sentiment, but because of the public sector infrastructure spending that's been rolled out today, that will have its own multiplier effects and crowding in effects of the investment. And I think this is and along with the confidence that both inflation and fiscal prudence, fiscal consolidation is being maintained. So I think macro stability along with this impetus should provide the best condition for investment cycle to become much stronger in the days going forward.
Sure. Maithili, briefly on the fisc, still not enough clarity on whether this is going to be an above the line item or below the line item. As per IMF standards, it probably is an above the line item, but as per Indian accounting norms, as pointed out by the chief economic advisor, it's a below the line item. What impact is this going to have on the fisc? Is it something that needs to be worried about, or how can this be made neutral to the fiscal deficit, as the economic affairs secretary pointed out?
To our stricter standards, it can be above the line.
Okay, you're saying it can be above the line as well, Dr. Kumar. Maithili?
Well, actually, it really doesn't matter. These are accounting finesses. So, just like we used during the Mr. Chidambaram's time, the government resorted to oil bonds, fertilizer bonds, and these were all taken as below the line and not taken as part of the fiscal deficit. So, likewise, it's only the interest cost that really formally comes into the fiscal deficit, because the fiscal deficit is really an excess of expenditure over receipts. So, what it does do, what these recapitalization bonds do, really is add to the government's debt. But the debt is quite different from a fiscal deficit. To the extent that you have to service the debt, and there you have to pay the interest cost, that does add to your fiscal deficit. But today the government is in a lucky position where the interest rate has fallen quite substantially. So if it were to pay interest at today's market related rates of interest, then I don't think the hit on the fisc would be so much, particularly since it's going to be spread over 2 years. But Sandeep, you must allow me to respond to Rajiv's point about the Bank Boards Bureau, and where I wanted to disagree with him, with you Rajiv, is that though the Bank Boards Bureau was set up with a great deal of hope, the fact is that chairmen of banks were shifted arbitrarily without the bank board's permission or even telling them about it, and as a result of which 2 of the members resigned from the Bank Boards Bureau. So that is what my unhappiness with the government and the angst is, that when you set up an institution with a Bank Board Bureau with a very noble intent, but you did not follow through with it, and that is what the government really needs to do if we want to ensure that public sector banks become as nimble, as agile and as efficient as their private sector counterparts.
Okay. Okay. Before I come to you, Dr. Kumar, before I come to you, I want to step in a quick question to Jaggi as well, which is on the point that Maithili was earlier making on the fact that this is adding to the debt burden on the government, and that's typically something that rating agencies may frown upon. Is that a big concern, Jaggi, the fact that they may frown upon an accounting arrangement, as the government's overall debt burden will obviously go up as a fallout of this new arrangement?
Yes, unfortunately, you can't make an omelette without breaking eggs, and I think the debt burden will go up, and whether the burden goes up on the debt side or whether it actually formally increases the fiscal deficit by the government actually taking in directly equity by asking banks to make rights issues, which can then be deployed as proper capital and then disinvested probably 18 months down the line when the shares are higher priced. I would advocate a temporary slippage in the fiscal deficit, banks directly giving their equity to the public, and if they're not taken up, the government swallowing up the balance, so which will actually end up being sort of increasing the government stake and then reducing it. I think it does not matter what accounting fiction you use. The fact is ultimately either debt or fiscal deficit will go up, one of the two or both. Now, why pretend that it doesn't exist? So I think it's better to be transparent and say this is a one-time hit we have to take in the interests of starting the lending cycle and cleaning up balance sheets, and do that. But more important, I think, from the point of view is the bank reform going to follow through or not? And we talked about Bank Boards Bureau, but even the guy who is still left there is busy playing cricket. I mean, it doesn't make sense to have a Banks Board Bureau where the chairman is actually looking after BCCI or something else. So I think you need to have an independent board that looks at bank shares, and also a long-term privatization program which needs to be put in place. I think we need to have some concept whereby The public sector banking space is shrunk to around 40 to 50% of the market. There is a legitimate space, but it should not be occupying 70%, where you become a problem for the taxpayer every time there is a problem.
Okay, fair enough. Dr. Kumar, I think what's clear from the point that both Jaggi and Maithili have made is that this has to be accompanied, like you yourself said, by governance reforms as far as banks are concerned, and probably, their view is that not enough has been done in that particular regard. Do you agree that that is imperative for this to follow through, for this to have impact? Otherwise, we'll probably be back to square one, because fundamentally, what helps, what can be done to avoid a recurrence of the problem, the size of the problem that we've been trying to battle for the last 3 years. So, what in your view needs to be done to ensure that we're not back to square one, that we don't see a recurrence of this NPA crisis that has manifolded over the last few years?
Sandeep, the two essential conditions for the banking sector to become far more efficient and become nimble, as Maithili says, are one, the giving up what Rakesh Mohan called lazy banking by the public sector banks. The public sector banks, like their private sector counterparts, must go out and woo the better borrowers, must get into the retail banking much more than they have done in the past. Could also hold hands, to get the borrowers working better and more efficiently and generating profits. So give up the whole notion of lazy banking. And the other one, which was absolutely rampant between 2008 to 2014, was the phone banking, which is to lend on the basis of phone calls, whether or not the large infrastructure projects had their commercial viability or not. So if they give up these two things, then I think the banking sector is in for much better times than what we've had in the past. But along with that, I think, as I said earlier, and I want to sort of repeat that, with or without the banking bureau, I have seen visibly, because I've been watching this carefully, the induction of people from the private sector into running the public sector banks, the induction of professionals onto the public sector boards, the boards of the public sector banks, the stoppage of the practice of appointing political favorites onto these boards, just as a matter of rewarding them for whatever reason. So I think there is a growing professionalization, and I know for a fact the Prime Minister and the Finance Minister are both keen to ensure that there is good governance in the public sector banks. And more than that, you also need some structural reforms, because there are some banks in the public sector which are simply now probably unviable. Where you have 25%, 27%, NPAs, some of which where we know that their NPAs have been wiped out and they have negative NPAs, etc. So I think, and there has been conversations in the past about merging these weak banks with the strong ones, etc. So some of that would have to happen to make sure that the that the public sector banks are in a much stronger and more efficient space than what they have been in the past. And I think, as the Finance Minister himself hinted, some of that would be coming our way, as he said, in the course of the next few months. So let's agree to the fact that a big step has been taken, and that some of these governance measures have already been put in place, and the rest is about to follow. So that all together would mean a massive job of public sector bank rationalization and reforms, which many people had said, this government was not capable of doing. It's a huge decision, etc. But the government has now clearly shown the courage that they can handle it, and they've started the process. And I think it will get completed in due course.
Okay, let's address the other point that Dr. Kumar made as well, and I know Anant Narayan, you have a view on that as well, on whether this is going to move the needle as far as economic activity is concerned. Is this measure in itself going to kickstart the investment cycle? Because the Finance Minister as well in the press conference made a strong case for the fact that the government is doing this with the intent that this will lead to recovery of the private investment cycle, will lead to demand being created, and that in turn will lead to the revival of the economy. Do you see that happening, Anant Narayan?
Yeah, sure. Sandeep, just before that, on the fisc point, a slightly different perspective. Look, you asked the question on whether this will impact rating agencies' perception of us, etc. I don't think it will. The reality is rating agencies know we have a banking problem. So if you're actually addressing that through whichever route, it's not a surprise for them. So, I don't think that itself will cause a problem. The second is, whether this is over the line or below the line doesn't really matter. The reality is you're borrowing money to infuse capital into banks, where, as Jaggi points out, you have the hope of getting back some return over time.
Right.
So the quality of this fiscal deficit, therefore, is very, very different from, let's say, doing a NREGA or doing a farm loan waiver, where you might have the noblest of intentions, but what you get out of that spending is really questionable. So I think it's a very, very different kind of a fiscal problem than even the oil bonds or the NREGA, etc. On the question that you asked, I think it's a good question. Look, the government is clearly trying its best. It has given the capacity for banks now to lend as and when the investment cycle starts. And that mere process itself should help in terms of sentiment. There should be a case that, if banks, which is seen as one of the weak pillars of the Indian economy, are getting resolved, therefore maybe there's a chance of an investment cycle coming back. Second, the government is also trying to spend from its own fisc in terms of infrastructure. We talked about the roads, we talked about ports and so on and so forth. Having said that, I think we still need some amount of activity happening on the private sector side. Right. I think that resolution of the NPAs has to come through. We are still seeing baby steps as far as that is concerned. For private sector, investment climate to come back, all the large corporates that are sitting with stressed balance sheets need to see some kind of resolution for the market to say, here is the time to start investing again. Mm-hmm. So until and unless we see, some more resolution on the NPA side, that private sector animal spirits might just be a bridge too far.
Okay, Maithili, come in on that because Anant here says that all this does is essentially increase the capacity of banks to lend. That alone is not enough to revive the private investment cycle. Do you agree with that assessment, Maithili?
Yeah, I would agree with him. It certainly increases the capacity of the banks to lend, but whether they will is a big question mark. Two preconditions. One, bankers must be very sure that when they make a bona fide decision which goes wrong, for reasons that are not malified intent on their part, they will not be penalized. If a banker fears that for every wrong decision that he makes, he'll have the ED, the CBI, the CVC knocking at his door, no public sector banker is going to stick his neck out and lend. So bankers must be very sure that they will not be penalized for bona fide decisions that go wrong. That is number one. Number two, even though this increases the capacity and even if bankers will lend, we must have demand for credit. Today the situation is such that there is virtually no demand for credit. Hopefully when the government spends on infrastructure, rural housing, etc., demand will also be created. So till such time as these two conditions are created, I'm afraid we will not find credit offtake or the investment cycle really return. But hopefully this is only a question of time if the government is serious about banking governance reform and if demand picks up as a result of government increased public spending.
Right, Jaggi, but doesn't this change sentiment for corporate India, like Dr. Rajiv Kumar pointed out as well, and the fact that this could be the beginning of the revival of the private investment cycle, or like both Maithili and Anand Narayan here, you're not that optimistic that that's going to come through anytime soon?
See, recapitalizing banks and making them eager to lend is a necessary condition for a revival in the investment cycle, but it is not a sufficient condition. A lot of other things need to fall into place, including corporates feeling emboldened and capacity has to come close to the limit so that you start investing, demand has to pick up, consumption has to pick up. Most importantly, investment demand needs to pick up in some form or the other. While the government's infrastructure program and the sale of assets, including road projects and toll roads being sold for sale, will indeed increase demand for credit because private sector bids for it, they'll have to take probably loans from banks. So all kinds of infrastructure projects themselves will create a demand for us. So this whole pump priming exercise will take some time to play out in the economy. My guess is that it is in fiscal second half of fiscal 18-19 that you will really start seeing a sharp uptick in investment demand. So we have another 9 months to go, or next 3-4 quarters to go before that starts picking up. But it's necessary, but not enough right now. So we'll see it happen slowly. Meanwhile, the other reforms also have to play out, including the GST, various other things. Exports are picking up, so that's a good sign, which means corporate profitability will slowly start picking up from that side as well. We had 9 or 10 months of positive growth and 26% in the last month. That's terrific. Finally, one more engine has started firing.
Closing comments from my panel. Dr. Kumar, coming to you first. The fact is that this decision has to be seen in the context of the other decision taken today, which is a massive infrastructure push with the Bharatmala project, almost 6 lakh crore investment in the road sector, of course, spread over a period of 5 years. Is this the stimulus that the economy needed? Is this alone enough? The infra push coupled with the effort on recapitalizing banks, two things, are they enough to now revive the economy?
Sandeep, there should be more than enough actually, because just slightly differing from Jaggi on the private sector demand, investment demand. That the IPO mobilization has this year been almost at a record high. It's already about 40,000 crore, and you expect about 63,000 crore as opposed to 37,000 crore, which was the peak some time back. So that shows that the private investors are now beginning to move in. Also, the offtake from the corporate bond market has been enormous this year. Because the private investor, the better placed private investor has used the corporate bond market to raise his investment. And now with the exports beginning to rise, with the demand for heavy commercial vehicles beginning to rise, and the huge infrastructure push that the government is giving by spending its own money, as it were, and not waiting just for PPP things, I think all that put together should see investment demand come rushing back into the economy. I would have thought by the beginning of next year, which is the fourth quarter of this fiscal year, rather than the second half of the 18-19, as Jaggi seems to think. So my understanding is that you will see a much better second quarter already, and then a growth pickup in the third and fourth quarters, which will then be sustained because of all the structural reform that the government has taken, not just today, but in the past 6 months as well. So I think overall, you are in for now for a sustained economic growth, which will, I think, turn 8% by this time next year.
Okay, that's an optimistic note. 30 seconds, Anant and Maithili, because I also feel today the government has in some way settled the sort of fiscal stimulus debate once and for all. Economic Affairs Secretary was emphatic when he said that we are sticking to 3.2% for this financial year and we'll review in December, but one gets the indication that the government is not looking at stimulus and probably feels that there is no need for stimulus given these programs that have been announced. Maithili, does this settle the debate once and for all?
Well, I think for the moment, yes, because certainly as far as government's disinvestment target, about which there were a lot of doubts earlier, now seems to perhaps be on track, because we've seen the GIC issue, now we have the New India Assurance issue, likely again to sail through. So I think the government has been fairly successful, and there is a possibility that it might even exceed its target, its very ambitious target of 72,000 odd crores. So that might make up really for whatever shortfall we have in RBI's profit. So hopefully whatever shortfall there might be in the revenue side, the government might make up, and it may not be necessary for it to kind of exceed its fiscal deficit target, particularly if it's going to go by the recap route, which is, as I said, fiscal deficit neutral. So hopefully the government might not see the need right now. We'll of course have to wait and see how GST pans out in the subsequent months. It's early days yet, but as of now, I think the government is going to perhaps hold its horses and take a decision later in the year, maybe at the end of December.
Is that the correct strategy, Anand Narayan? 30 seconds to not trade macroeconomic stability for growth and look at other means to boost growth?
Look, I think this is a very ambitious start by the government. I think it's the government for the first time seems to have seized the initiative on the economy really. So it's a good start. I'm pretty optimistic about India in the medium term. I think the focus on real estate and then low-cost housing particularly should do us wonders and can do us wonders going forward. Having said that, we also have to be realistic. There are issues which need to be resolved. Actual capacity utilization is extremely low, which is divergent to where the equity markets actually are trading.
Right.
We still have NPA problems which need to be resolved. And the global environment is looking extremely uncertain, with what's happening on the Fed, etc. So, I think it's a mixed bag, but it's a great start. The government has seized the initiative. Hopefully the sentiments turn from here on, and as Mr. Kumar says, maybe this is the trough from where we actually go into 8% growth eventually.
8% growth. So hopefully they'll come sooner than later. Dr. Kumar Kant, thank you enough for joining us live and exclusive on the India Development Debate. Maithili Jaggi, Anand, thank you so much for being with us. Joining us, Amit Malviya of the BJP and Mohammad Khan of the Congress. Gentlemen, thanks for being with us on ET Now. Not sure if you heard some of our panelists on the show earlier this evening, but I'm going to start off with you, Mohammad Khan. Can you fault this bank recapitalization program that's been done by the government? While many people can be critical on various things in the economy, the one problem that the government inherited from the UPA was the NPA mess, and finally one gets the feeling that the government has moved in that direction to at least recapitalize PSU banks. Can you fault what has happened today, the announcement made by the finance minister today? Mohammad Khan.
Well, on the face of it, Sandeep, it doesn't look as if it's something that should be faulted. But when, like with everything else with this government, when you look a little closer, it appears that a large part of that will be financed by borrowings. When it's financed by borrowings, then you begin to wonder how sound is this recapitalization. Secondly, I want to say this. It is incorrect to say that they inherited the problem of NPS from banks, because the Congress government has been after them to go after several of these defaulters. Prominent names such as Mr. Malviya, not to be confused with my erstwhile company, are still on the loose. I would say that over the last couple of years, if this government was seriously intending to go after NPAs, then they shouldn't have waived off as many loans as they have done, which amount to several lakhs of crores. Secondly, I want to say this. I think the best way to summarize Mr. Jaitley's speech was full of sound and fury and signifying nothing, to quote Shakespeare. I think that Mr. Jaitley, a lot of people expected more from Mr. Jaitley right now. They expected relief vis-a-vis GST. What they got instead was a 2-month waiver on late fee penalty. People expected more clarity in the filing of their returns. People expected a fiscal push of some kind that was not just some sort of unimaginative Bharatmala project. I mean, good. It's heartening to see, Sandeep, that after 3.5 years, instead of presenting a report card of what they've done, they're giving us a roadmap, and barely a roadmap, it's just an announcement at this stage, of what they intend to do with the remaining few years that they have left.
Okay, fair enough. Amit Malviya, come in on that. You heard Mohammad Khan there. He's saying that this is just jugglery. He's saying that you can't read too much into recap. He's even saying that you didn't inherit the NPA mess from the UPA. How are we going to counter Mohammad Khan tonight? Amit Malviya.
Well, I just heard your panelists who spoke for half an hour before we came on air, and I think they made a lot of sense in the fact that they pointed out specifically that there were a lot of NPAs in the system when we took over office in 2014. The worst thing is that those NPAs were not adequately recognized by the system, and the loans that were given were more politically extended rather than on any merit, and that just led to a certain crisis in the banking system and also in this industry per se, because a lot of companies who were into infrastructure projects and otherwise were in the red, and their balance sheet had been completely eroded. Now that left us in a situation where there was very little room to do things around. Importantly, when UPA left office, they had set out a number which was actually very unrealistic to meet unless we ensured that fiscal discipline was brought in the last 2-3 years that we've been in office. So what we had to do really was that in order to ensure that the world sees us for what we are, we stuck with the fiscal deficit numbers that the UPA finance minister left with us, and we first did the financial consolidation part of it, which meant that we tightened our strings. We ensured that a lot of leakage in the system was controlled. We ensured that a lot of financial inclusion programs were brought in. Direct benefit scheme was introduced, and a lot of these measures were put in to just ensure that we were collecting every bit of money that was available to consolidate our financial position. Now that we have done that, and post demonetization significantly, which has brought in a huge amount of liquidity into the system, by an estimate about 3 lakh crores have got into the financial system, the organized financial system, wherein it has left the banks with a lot of liquidity but not enough capital for them to lend and provide for as per the regulation.
Right.
And therefore this move becomes very significant, that the recapitalization and the way it has been brought in. Now one could argue whether it is going to be by way of a debt instrument or an equity instrument, would it contribute to fiscal deficit or not. So there are constraints around how much capital the government needs to hold in these banks, and therefore I think the government has taken the wiser route of getting in through recapitalization bonds that it is going to raise over the next 2 years. Interestingly, these recapitalization bonds can be taken below the line as per international standards and norms, which means it will not impact your fiscal deficit. And even if they were to impact it, the fact is that the government has done enough fiscal tightening in terms of macroeconomic and macro indicators that it has given the government the room to maneuver and do these kind of things.
Okay.
And lastly, this entire process of fixing the back home and then recapitalization is going to mean that the banks are going to have a lot more money to invest. It is also going to mean that the government has enough room to ensure some amount of public spending, because it has announced these big infra projects which the government is going to spend. And lastly, there is a lot of interest, particularly from these multilateral funding agencies who are willing to invest money because they see a great India story. So put together, we are going to have a situation where we will be able to put the country on a growth path, both while we maintain our fiscal discipline, while we ensure that we are not flouting numbers and we are attractive as an investment destination to various agencies as well as investors. And at the same time ensure that we have provided everything that we need to do in terms of impetus and in terms of spending.
Fair enough.
Attract private investment as well.
Mohammad Khan, you heard Amit Malviya there. Both of you made long opening remarks. So now let's sort of keep on. I want crisp answers. Mohammad Khan specifically, I saw you nodding your head in disagreement when Amit Malviya was saying all that he was. But I have a specific question, simple question. If you had to capitalize these banks and if you had to pump in 2 lakh crore rupees into these banks, if you were to, other than issuing recapitalization bonds, tell me another efficient, elegant way of doing this that doesn't impact a fiscal deficit, because where is the government going to get the resources from? So please suggest a better way of recapitalizing PSU banks other than by doing it via recap bonds. Mohammad Khan.
Actually, Sandeep, that's a good question. I'll tell you why this entire move is disheartening. First of all, I believe out of that, and Amit will be in a better position to clarify, a significant percentage of that money is coming from market borrowings, not bonds. If it was just bonds, it would be similar to the quantitative easing done by the Fed in America, which is what they're trying to emulate here. It is also disheartening that they have arrived at this conclusion 3 years and 6 months into their tenure. I want to say this. I would put a lot more stock into what this government is saying right now. And that's why I called it hollow rhetoric at the beginning, because I would put a lot more stock in it, because their record, as attested to by the RBI, which I must say is behaving in a very independent fashion in these last 6 months, it says otherwise. The RBI data, and I'll be very brief, summarizes, and we've debated this on your channel, contradicts the Prime Minister on the GDP numbers, it contradicts him on the amount returned by demonetization, it contradicts him on the job front. We are at a 12-year job low. Now, all of this is good, right? But this is looking at a certain aspect of the economy, a very small part of the economy. Once you get these banks recapitalized, I want to ask them, what is your roadmap for getting this money back out into the economy? Are you going to lower lending rates? Are you going to reduce the CRR? Are you going to bring in steps that ensure that this money reaches the market? It's all well and good to say, yes, we've collected everyone's money and suddenly there's a lot of money in the system. But spending is essential for growth. That's a fundamental principle of Keynesian economics. If you don't spend money, how will you grow? And the other problem, Sandeep, you would have noticed this over the last 2 years, this has become a very tax collection driven government. And they have instituted measures that are tantamount to tax terrorism. For example, and I'm going to base this on facts, not opinion. In March of this year, they amended the Finance Act and they took away your rights to ask questions of why a raid is to be conducted. Subsequently, you saw a sharp increase in the number of raids being conducted on small businessmen. They actually touts that fact proudly. Now, the problem is this gives a large amount of discretion to income tax officials. The point I'm trying to make, Sandeep, very quickly is this. This government seems to see tax revenue as the only source of income. They're not generating investment, they're not generating revenue from their entities. Everywhere we look, the government is failing when it comes to generating income and wealth.
Okay. Fair enough. You've made your point. Let's talk about the bigger picture, not obsess too much about the bank recapitalization bonds and the effort made at recapitalizing bonds. Amit Malviya, the finance minister articulated that the intent of this move is to revive the investment cycle. And since you heard our panel, there wasn't a consensus view on whether this is going to lead to that. While it's a good step in recapitalizing banks and in sort of solving a part of the NPA problem, is this alone enough to revive the investment cycle, which is the big issue holding back the growth in the economy? What is the BJP optimistic that this alone will revive the investment cycle?
Sandeep, look, no one particular move can revive the investment cycle, and that's why I insist that the government has done a lot on several fronts to ensure that there is a desirable macroeconomic environment in the country so that people invest. Namely, your inflation is an all-time low. Your growth numbers have been at about 7.5% for 2015-16. We have seen a transitory dip now at this point in time, which is going to correct itself in the next 2 quarters. We've heard the IMF chief endorse the India growth story, and she's come out openly to say that big economic reforms like demonetization and GST are actually going to put India on a very high growth trajectory, and we have to be patient to see that. And in fact, you would start seeing that in the 3rd and the 4th quarter of this year itself. We have seen almost $400 billion of forex, in the country, of which about $100 billion has come in the last 1 year. So these are macroeconomic indicators that are looking very good, we're looking very healthy, and are seeing an uptick. Now, let's come to the investment cycle. When a big infra project like Bharatmala is announced, or a bullet train is announced, or border roads or coastal roads are announced, or several new airports are being built and railways is being modernized, new railway stations are being built, all of this requires spending, all of this creates jobs, and all of this attracts more investment from the private sector. Thirdly, I keep hearing about this narrative that there are no jobs being created. I want to ask 2 very fundamental questions. One, that there is no proper mechanism to measure jobs. Then on what basis are these assertions being made? Are they just politically motivated? And one would be tempted to believe that that is the case. Point number 2. There have been several independent reports, including those of leading multinational research firms as well as domestic ones, which have pegged the Mudra Yojana itself having created as much as 5.5 crore jobs and several other allied jobs. Now, unfortunately, there is no matrix in our country to measure these many job creations that are happening, and particularly if they are entrepreneur driven. Okay. And thirdly, a more commonsensical point. If there was indeed such a big problem with the economy, and if there was indeed lack of jobs, and there was an agrarian crisis, as most people would like us to believe, you would have seen a lot of unrest in this country. But that is really not the case. In fact, there is a lot of optimism today in the country. There is and this optimism is not born out of thin air. This optimism is born out of very clear numbers that have been put out, firstly by the Prime Minister when he addressed the company secretaries,
and today by the Finance Minister,
and then subsequently now today when the Finance Minister spoke first about the macroeconomic and then put out the capitalization plan.
Okay. Mohammad Khan,
Sandeep, can I come in here?
Yeah, I'm coming to you, but I want to just add one question, which is that I still don't understand what is the Congress's sort of recipe, because on the one hand, your former Finance Minister P. Chidambaram says, do not allow fiscal slippage, stick to fiscal consolidation target, which is what the government is doing. Then you have people say, invest in social sector plans, invest in infrastructure, which is again the Bharatmala is again a massive investment in public infrastructure, in roads. So what is it that you would like the government to do that it is not doing? And your counter to the point that if there was so much of gloom, where is the unrest in the country, is what Amit Malviya is saying. Mohammad Khan, I'm giving you 60 seconds.
Fair enough. I'll answer all of these questions. Yeah, that's perfect. Sandeep, first of all, you asked me, what would be the alternative to recapitalize these banks? The answer to that is simple. When oil is trading at $50 a barrel, at a third of the price it was when under the UPA, and you've saved, by your own admission, 2 lakh crores because you've not lowered the price, you've continued to levy excise and custom duty on it. Use that money to recapitalize banks. Don't borrow. I don't understand what you've done with that money. You clearly haven't spent it on infrastructure projects by your own admission. Number 2, my learned colleague was saying that there is no way to measure jobs in the economy. I'm sorry, what did you say? Oh, sorry. Yeah, what I'm saying is, my friend was saying that there is no way to measure jobs in the economy. There is a unit of measurement. It is called the GDP. It is the sum total of goods and services produced in an economy in a year. Services includes jobs. If your Mudra scheme, Stand Up India scheme, Startup India scheme were indeed producing the kind of jobs that you claim, they would be captured by the GDP numbers, which is not so. Thirdly, Amit, you say that these numbers are put forth by multinationals, independent agencies. Forget them. Look at the data put forth by the RBI. The RBI says jobs are at a 12-year low. You say it's a few quarters. The Prime Minister comes out and says there's a certain segment of politicians who propagate pessimism. Unfortunately, the RBI came out for him 2 hours later and actually revised their growth projection for the entire year, reducing it by 1 entire GDP point. So it's not just a matter of a couple of quarters. Finally, I would say this. You need imagination. You cannot resort to excessive taxation. You cannot resort to things like a Bharatmala push when you have no roadmap for achieving the same. And that is the answer to your question, Sandeep. The reason we do have no confidence, the reason we repose no confidence in these people's promises is because they have, after 3.5 years, they have shown us a complete lack of talent and ability to execute projects of half this size, much less this size.
Okay, Amit Malviya, I'm going to let you have the last word, just 30 seconds, to counter what Mohammad Khan is saying and to also make this larger point, saying that is today's step a series of steps to come, or is this a one-off? Are we going to see more steps taken by the government to revive the economy? This is just one part of the problem that has been fixed today. Can we expect more over the next few weeks and months? Amit Malviya.
Sure. Sandeep, you know, imagination is a luxury that opposition has all the time. But when they were in office, they inherited an economy at 8.8 and left it at 4.4, and that speaks for their record. Now, let me just come quickly to the point that he spoke about petroleum collection that has happened. There was a big void that was existing, and the money that was collected there was deployed there and was deployed for several social sector programs, whether it was the housing for poor or whether it was for, building toilets or for, providing gas cylinders to people who did not have them after 70 years of independence. All of that money has got into those kind of social projects, which have seen much higher spending and which have actually seen a lot of outlay and not just something that was put on paper. That's point number one. Point number two is that we have to recognize for the macro turnaround that this government has brought out, and today we are in a position where we have a little bit of room to maneuver around and ensure that there is investment that the government can make on its own and also attract private investment. And we are now getting to a point where that is starting to happen. And lastly, the two big reforms that this government took, namely the GST and the demonetization, are something that are going to leave the economy in a bit of a slow growth for maybe a quarter or two.
There's something that's going to haunt you for the rest of your years.
But the potential of this developing over a long term and providing a very high trajectory of growth is extremely high. And we are already starting to see, because if you see reports, they are clearly pointing out that
Sandeep, can I just say one thing in this rebuttal?
Are getting credited 1/3 of the cost that they got from the official sector.
Okay.
And just and one last point to quickly.
Sandeep, can I say one thing in return?
All of this has left to very healthy tax collection. It has increased the tax net, and what it means for the middle class is that earlier the entire onus of funding the government programs and other things lied squarely on the middle class, but now this, because of the tax base increasing, the middle class is going to benefit over a period of time. These initiatives that have been announced today are one of the many. And the finance minister today indicated that there are a lot.
Amit Malviya, I am running out of time. Amit, Mohammad Khan, 10 seconds. Make your point.
Just 30 seconds I need. Yeah. See, exactly this. The fact that till today, after seeing all the suffering that it has caused, demonetization and the hasty and shoddy implementation of GST is not even acknowledged by them or their leaders, tells me that this is the reason why I have no confidence in them today. Those were bad economic decisions. Everybody is saying those are bad economic decisions. And there are traders. You asked where are the protests in the country? You need to look out of your window. There are protests happening across the country. In Chennai, in Delhi, in Gujarat, in Maharashtra, there are farmers dying at your doorstep. There are countries in a state of turmoil. It's reaching a boiling point. The fact
Mohammad Khan, fair enough. You made your Mohammad Khan, You've made your point. Demonetization, I guess the jury's still out. But on GST, it's unfair to sort of give stick to the government because most of the decisions were taken by a council of which Congress chief ministers were also part. Demonetization, I could agree with you. The jury is still out. We'll have to wait and see. But I guess time will tell whether these reforms, had the effect that they intended to have. We'll know in a few quarters. We don't have to wait too long. Is it just a one-quarter blip that we saw in the first quarter, or is the pain likely to continue? Or like Dr. Rajiv Kumar, the Vice Chairman of the Niti Aayog, pointed out, he says that we will be growing at 8% next year. We'll know in a few quarters what the real picture is, and I guess the voter will then decide. Mohammad Khan and Amit Malviya, thank you so much for taking time out and joining us on the IDD Face Off this Tuesday evening right here on ET Now.